What is up, YouTube? It's your host, Rich GNT, and we are here to talk about Trump's plan, I guess. I don't think it's anything concrete, but he kind of floated it out there over this weekend of a 50-year mortgage. So when I first heard this, right, and let me make this perfectly clear. I'm not a subject matter expert, SME, on mortgages or anything like that. You know, I'm not going to lie to you. But with the very little I do know in comparison to how much information is out there, I immediately equated it to people stretching out a car loan, right? The reason people stretch out car loans is because they want to pay less every month as opposed to paying that, you know, what could be a very exorbitant amount. You know, you could drop your payments from $500 and in some cases to $300. That sounds all well and good. You know, it sounds fantastic, except when you think about how much you're paying in the overall, right? How much you're going to be paying back the bank at the end of that term, unless you paid off early. That's instantly what I thought of, because I know 30-year mortgages, they're steep, they're kind of deep. A 50-year mortgage, not to get morbid, but that's a coffin. You know what I'm saying? If you bought a home, right, in your 20s, right, with this 50-year mortgage, you're not getting out of that house until 70. And obviously there's ways that you can get out of it and everything like that. Like, we all know that. But realistically, in the idea of like how it's going to be like done, especially when it comes to you selling your house, you need to make sure you have equity in it. With a 30-year mortgage, sometimes some people don't see equity at all, in some cases, depending, and really depends on the market. They don't see equity until like 20 or so years in. Because in the first half of what you're paying when it comes to that 30-year mortgage, you're paying interest, because the banks pretty much want to make sure they get something out of you, because the whole point of them giving you a loan for that much is because they want to make money off of you through the interest. And I'm pretty sure when it comes to the 50-year mortgage, it's not going to be any different. You're going to be front loaded with a whole lot of interest because they need to make sure they get their money back, or at least some of it back, in the case that you default or whatever have you. You know what I'm saying? So that's where my mind went. I instantly thought about that. And then when I started doing more research and really paying attention to what it means to have a mortgage and everything like that, I saw that, yeah, this is not a good idea. It's not. I'm not behind this at all, because I understand the purpose. The purpose is to stimulate the economy, more so in the housing sector. And, you know, with the numbers coming out, it's basically saying that people for the first time ever have gotten to a certain age without buying a home for the first time. And I think that age is somewhere in the 30s, mid-30s maybe. And that's high in comparison to past years. And obviously it's because things are different. Things are different. And personally, right, especially when you look at the average price of a home now in the United States, which is between $400,000 and $450,000, the average, depending on where you're at, could be a little bit less, could be a little bit more. I don't see it getting any better. I don't see it dropping down. I don't think house prices are going to drop down. I think they could stagnate. For how long, not too sure, but I don't see them dropping down from where they are right now. So I understand the purpose of this. I just don't think it's going to be good. But enough of my yapping. We're going to jump right into this, and then we have a video right after that's going to explain it a whole lot more. In addition to suggesting $2,000 tariff checks for Americans over the weekend, the Trump administration suggested it's working on a complete game changer, the 50-year mortgage. Some, however, suggest it may not be as financially beneficial as it seems. Federal Housing Finance Agency Director Bill Pult, not pronouncing that, made the announcement on Saturday, and it comes as Americans have sought out assistance with their mortgages, at least according to Google search data. ARMs, or variable rate mortgages, have become more common than they were after the 2008 housing crisis. Mortgages are generally considered good debt to have, though paying one off used to warrant a patriotic plaque. Owning a home and paying a mortgage allows you to build equity, which experts say would slow over the life of a 50-year loan. You might not be in an equitable position for a very long time, and let's just say anything happens, because 50 years is a long amount of time. Anything could happen. 10 years in, you might say, you know what, this is not the house that I want. You might get a family. Anything could happen, and all of a sudden now you're kind of locked in with a house that has no equity in it for you to be able to sell it. You know what I'm saying? That's a big issue. And I think they're going to jump into it here, if not in the video. My issue with it as well, the banks are the ones that make the real money. They're the ones that really benefit. Because with a 30-year mortgage, right, you run the risk of maybe paying, let's just say you have a house that's $300,000. With a 30-year mortgage, depending on the interest rate, most interest rates hover around like 4 to 6%. Within that range, you could probably pay back, what, $400,000? Yeah, around that. $385,000 or $400,000, right? With this one right here, I've heard experts talk about it. You run the risk of paying almost double. So around $600,000 plus. The banks are getting away with robbery in this case. On paper, a 50-year mortgage is relatively simple. You would owe a smaller amount each month than on the average 30-year mortgage. But as Realtor.com points out, you would pay more interest overall on a 50-year loan than a 30-year loan. The slow equity build would make trading up or down very difficult, Lawrence Young, chief economist of the National Association of Realtors, explained. It will also take almost 40 years to pay off half the balance, yes, meaning most borrowers will not begin building meaningful equity until the final decade. Yeah, and by that point, let's say you're buying a home at $400,000 with 20% down and an interest rate of 6.25, not far from the average rate of 6.22%. On a 30-year loan, your monthly payment of just the principal and interest would amount to $1,970 per Fannie Mae's mortgage calculator. If you increase that to a 50-year loan, your principal and interest would drop to $1,744. With a 30-year mortgage, you would pay more than $300,000 in interest overall. With the 50-year mortgage, that total would be north of $800,000. Yeah. And what they said up here, right? Let's say you're buying a home at $400,000, yada, yada, yada. Most people don't put 20% down. Most people don't have 20% to put down. So what happens is that you enact PMI, which makes it a whole lot more difficult to pay off your mortgage loan. The more you think about this, and like I said, my very, very, very limited information when it comes to this or knowledge of this, I heard this, I was like, this don't sound good. I understand the reason for it. Good intention, bad results, sadly. But it's unclear what the interest rate would be for a 50-year mortgage. True. Data released by Freddie Mac last week showed the average rate for a 30-year mortgage was 6.22, which is not great, but it's not great. Trust me, it's not. While the rate for a 15-year mortgage was 5.5%. The rate would likely be higher, Matthew Graham, chief operating officer at Mortgage News Daily, told CNBC. Wow, I can't read. Higher interest rates coupled with lower monthly payments and thereby a low pay down of the principal early on, like I said before, could cause a double whammy for those with any hope of building equity, he explained. A 50-year mortgage isn't a new concept either. Really? It traces back to Southern California according to reports. In 2006, one expert told NBC News that 50-year mortgage may be the only way buyers can get into a home because many had debt to income ratios that prevented them from qualifying for a 30-year mortgage. This is one of those times where I would agree with many other people by saying that it is very hard to survive nowadays, especially if you want to live the American dream of buying and owning a home. And a lot of people like to say that, you know, what's the point of renting? You're not really doing anything. The point of renting is that you don't find yourself in a situation like this, where you're just paying money to an interest rate first, and then you focus on paying money to the actual loan amount that you have. So it's a difficult one because seemingly the American dream of owning a home is getting further and further away for a lot of normal people. Still, experts nearly 20 years ago pointed to the same drawbacks: slow building equity, minimal monthly savings, greater interest payments over the life of the loan that opponents are noting today. It will ultimately reward the banks, mortgage lenders, and home builders, while people pay far more in interest over time and die before they ever pay off their home. Yeah, because by the time, let's just say you bought a home at 20, like I said, you're not possibly paying off that home until 70. You buy a home at 30, 80, like it's not, that's not good. Rep. Marjorie Taylor Greene, who has made waves recently while criticizing her own party, wrote on X, "In debt forever, in debt for life." Yeah, it's true. She went on to suggest companies and asset managers should be stopped from buying up simple family homes. Yes, I agree with that. In Georgia, that's a big issue. Maybe that's why she spoke about that. To be fair, a lot of companies, or should I say, very few companies own a lot of the homes here. If you ever do research into it and look into it, you'll see what I mean. But I think that's a big issue, and I think we should find some way to, I'm not saying limit it, but because you don't want to mess with, the market when it comes to, you don't want the government messing with the market. You just don't want that at all. But at the same time, something needs to be done because it's having bad repercussions. But yeah, the thing I want to jump into next is this video where this guy, don't know his name, I'm so sorry, suck at names, pretty much explains in more detail why the 50-year mortgage would be catastrophic.
And I really wanted to have you on so you could define affordability for us. But here we go. The White House is floating this idea. Bill Pulte is saying, thanks to President Trump, we can indeed work on the 50-year mortgage, a complete game changer. How does that work in dollars? Here you go. 30-year fixed mortgage right now. You're paying $2,038 a month, principal and interest on a $400,000 home. At the bottom, under 50 years, you'd save a couple $100 a month at $1,822 principal and interest. That is proposed. Do you like this idea?
I do. So I had a thought, and it's kind of mean, it's kind of cruel. If you can't afford to buy a house, just don't. Don't try to put yourself in any situation where you end up house poor. Don't try to like live the American dream when you know damn well you can't. Just don't. And it sucks to say, it really sucks, because we found ourselves in a situation that was not of our own making, but that's just is what it is. If you can't afford the house, just don't buy it. There's a lot of people out there that are house poor. You don't want to be one of them, because God forbid you make yourself house poor and you're in a 50-year mortgage, you're gonna be losing a lot of money.
I do not like this idea. And again, it depends on how much the house costs and what, but if you just took a 4% interest rate, for a 30-year it would be $2,300, for a 50-year it would be $1,900. So you're saving almost $500 a month in terms of affordability. But by the time you finish paying this bad boy off, the 30-year you pay $359,000 versus a 50-year, almost $700,000, right?
Oh.
So it's
Wow.
just a gargantuan difference just to make people feel better, you know, and that's not the way to do this, right? There's so many other ways. I feel so strongly about the momentum that we'll have going into next year. The one big beautiful bill kicks in. We'll have a more accommodative Federal Reserve. You know, I think economic activity is going to build. Companies will be encouraged to build here because they'll be able to write a lot of that off. I think we're on the precipice of an economic boom, and with lower mortgage rates that will help the housing market a lot. So this, I would rather see President Trump do some other things with that tariff money.
Right. But one thing that we also could see into the new year is the effect of some of the pullback on the regulations that were strangling a
That's
lot of
gonna help too,
businesses.
yeah.
And I don't think people realize that, especially possibly maybe in the housing market.
Well, you know, unfortunately, a lot of it is local, you know, but there's a lot of pressure, you know, particularly to hey, bring down this red tape. Let's bring it down. The problem is the starter home, right? Even right now, I think the average age for these home buyers is just 40 years old. You know, the same people that were buying houses 20 years ago.
Wow, way higher than I thought. I was saying 30s or mid 30s. You said 40 years old. Yeah, I really feel for those that want that to be a dream, especially if you have a family. Yeah, that's rough. 40, that's the average age. I didn't know it was that bad.
Not buying houses now. It's really unfortunate that before, the first-time home buyer, the average age was like 28 years old not long ago. So you had a young couple, you got married, you had children, you bought a house, the American dream, and that's obviously one of the big issues in this country right now.
Thank you, Charles. Nice to see you, sir. Come on back.
Sure,
We'll-
absolutely.
We'll define.
Yeah, that's sad. That's sad. But like I said earlier, if you can't afford it, and you just can't afford it, and it sucks. I guess that's the one part of the American dream you can't have. What makes more sense? Stunting to have a dream that you know you really can't afford, or putting yourself in a better financial position and you don't know what may come in the future? Me personally, I'll go with the latter. I'm gonna be keeping on top of this because this is interesting, and well, yeah, it's crazy. Once I heard this, I was like, oh no, this sounds terrible as fuck. It sounds bad. Like, it reminds me when I hear people say they have like a 6-year car loan, and I'm just like, unless you know you could pay it off in that time, which is fine. Yeah, that's crazy. This 50 years, and what you're paying mostly interest for the first. I know for 30-year mortgage, like, you're heavily paying interest the first 10, 12-ish years. I could be off. But for a 50-year mortgage, shit, the first 20, 25 years you could be paying off like just the interest by itself. That's insane. That's insane. And then not only that, that's what a good interest rate. You know what I'm saying? Like, relatively good interest rate. We don't know what the future holds. So it could be worse. That's why I can't stand behind this. Well, you guys already know the drill. That's it for this video. If you enjoyed it, leave a like. Comment down below. Tell me your thoughts. How do you feel about this 50-year mortgage? I mean, for me, I already said it before. Can't stress it enough. I'm not for it. Bad idea. No, non-starter. But let me know if you can see like some opportunity here. Let me hear like your opinions on it. Because who knows? Maybe you're looking at it from an angle that I'm not too aware of. Maybe you know more than I know, which most likely you probably do. So, you know, impart some of the information. Don't be stingy. That's it for now. Don't forget to subscribe, and I'll see you in the next one. Peace.